Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. We are entering a new monetary phase right now. For the first time in history, a public company has announced a coordinated strategy to bring Bitcoin-backed credit instruments into the global currency markets, and this is a massive deal. And I know that you're hearing this and you're reading the title of this thinking, Adam, this is clickbait. But here's the reality. I have a moral imperative to give you clickbait. Why? Because people need to hear this. I need to get as many eyeballs onto this phenomenon as possible. So Strategy has already created Stretch in the United States. Now they are moving to issue, hopefully, a European-style Stretch instrument. They have announced that they're moving into Europe, so you'd think that they would use the kind of framework of their most successful credit instrument, which is Stretch, which means that Bitcoin will be used as collateral to underwrite FX and sovereign funding flows across jurisdictions. And this changes everything because for years, Bitcoin has been treated as a speculative asset that has sat outside of the banking system, and now it is becoming the asset behind the banking system. When a Bitcoin collateralized credit instrument touches both dollar markets and euro markets, Bitcoin stops being a side bet. It becomes the collateral foundation that links currency systems together, and that is the highest tier function money can serve. Sovereign debt markets have dominated global liquidity for a century. The United States itself built global power by turning treasuries into the base collateral layer that sits beneath FX, beneath bond markets, and the banking system itself. But today, Bitcoin is entering that arena, and everybody is sleeping on how big of a deal this is. You need to understand that this means that the capital allocators can leverage Bitcoin and not government bonds to access global funding flows. They can build carry trades, short sovereign credit, and move capital between jurisdictions with a collateral asset that cannot be inflated, censored, or seized through monetary dilution. Strategy entering the Europe and Canadian markets is the beginning of a speculative attack on the fiat system at an international institutional level, not through retail speculation, through collateral substitution. Bitcoin is the global FX collateral. Every time Bitcoin replaces a treasury as collateral, sovereign credit loses power and Bitcoin gains monetary gravity. It is not a meme anymore. You are witnessing the monetary succession of the Bitcoin standard in real time. Everybody obviously knows that Strategy opened the corridor for Bitcoin to enter global credit architecture. Europe is only step one. Once there is a functioning BTC-backed FX curve, every other market is going to follow. Credit issuance, liquidity swaps, structured products, margin lending, derivatives, one piece at a time. Bitcoin will eat the entire global financial stack because it is a superior capital base. This is the moment that Bitcoin stops watching the game from the sidelines and steps onto the field. The old system was built on debt and the new system is built on incorruptible capital. And the world always migrates towards stronger money. It does this because capital seeks safety, yield, and certainty, and Bitcoin provides all three without relying on political trust or sovereign credit. So no, this is not hype, you little rascal. This is financial evolution, and it has already started. Before we get started, a very special thank you to Horizon for sponsoring this video. Horizon helps you buy Bitcoin using the home equity that you already have, and it is so easy because you do it without debt, without monthly payments or term limits. The Bitcoin is fully yours to hold however you want to, with no risk of forced liquidation. I'll talk more about Horizon at the end of the video. Their link is in the description below. Now I want to give an amazing shout out to Grain of Salt from MSTR True North because this guy is a wizard. He's seeing the big picture here and I want to elaborate on his thesis. Everyone go follow Mr. Grain on X right now, you little rascals. If or when a Euro version of Stretch launches, it is a bigger deal than digital credit. The first Bitcoin FX market will go live. There's the Stretch US version and then the Stretch Euro version, which is going to be the world's first cross-currency perpetual that is backed by BTC, and these are his 10 reasons why this is historic. Bitcoin underwriting a dual currency yield curve. The first currency pair bond ever created, which means that traders can quote a BTC collateralized Euro USD basis carry trade. And that creates obviously a long Bitcoin position and a short fiat Euro one. It bridges FX, credit, and Bitcoin into one instrument, and it turns Basel's deduct BTC from equity rule into market yield, and that is the big enchilada. This is the first non-sovereign FX spread in history. Do you understand what we're saying here? It's not of sovereign origin. This is Bitcoin, and every single new currency tranche extends the Bitcoin yield curve. So this is kind of a big deal, and we're going to get into this right here. And this is what I've been harping about. Bitcoin is evolving from a speculative asset to monetary infrastructure, and we are beginning to see what that's going to look like. For the last decade, institutions have obviously treated Bitcoin like it's a high beta trade or some exotic commodity, something that you bought for some upside exposure, not something that you used to finance positions or underwrite credit. But that era is ending. Once you can borrow against Bitcoin, once you can issue credit against Bitcoin, which you can do both of those things right now, and then once you can collateralize FX markets with Bitcoin, Bitcoin isn't an investment to traditional investors anymore. It becomes a funding asset. That's correct. Bitcoin is going to become a funding asset. At that point, it is going to enter the same category as treasuries, eurodollars, gold, other base collateral layers that global finance depends on. So think about this. Strategy is going to extend their credit instruments into Europe, so they're not just building a product lineup, they are building the plumbing itself, the pipes that are going to allow the global capital to move on top of Bitcoin collateral. And once the pipes exist, the liquidity is obviously going to follow because these products are superior to the legacy fiat ones. Think about what this means on a very first principles level, okay? The fiat systems rely on sovereign debt to literally function. Every single bank balance sheet is built on government bonds. So every credit system is pricing risk relative to the sovereign curve of the jurisdiction that it lives in. Now we have the first pathway for capital to price risk relative to Bitcoin instead. And as liquidity builds around BTC collateralized credit, the market will start comparing sovereign paper to Bitcoin paper, and it's going to be obvious which one is superior. This is literally a competition that no government can win because the sovereign credit dilutes and Bitcoin collateral appreciates. The free market is going to win. The free market is imposing itself on reality. And this is how the monetary power is going to shift in this world. It's not going to be shifting from tweets or ideology. It is going to be shifting through collateral competition and yield migration. When the safest collateral in the world becomes the most productive collateral in the world, everything that is built on weaker collateral is going to get repriced. So think the government bonds repriced, banking balance sheets repriced on a Bitcoin standard, corporate credit, FX funding, all of it. And the reason why I'm so hyped is because this is no longer theoretical, because it's happening before our eyes, and still people are bearish on MSTR somehow. It's quite obvious that the institutions are beginning to recognize that Bitcoin is not only a store of value, it is a store of confidence, a store of liquidity, a store of monetary truth. The old system has to issue debt to survive, and the new system compounds value without needing to create liability. One system decays, the other system strengthens. The market always chooses strength, and it is choosing Bitcoin. And this is where the story is going to get explosive, because once Bitcoin does enter that FX market, it becomes part of the operating system of global money, because foreign exchange is not just currency swapping, guys. FX is the foundation layer of international trade itself. Every single major institution out there relies on FX markets to function. It's the governments, it's the banks, it's the global corporations, it's the asset managers. If you control the collateral flows in FX, that's when you start to shape the future of global finance. So what we're saying is that Bitcoin is going to graduate from being a bet on the future to becoming the rails that move the future. And this is the Bitcoin collateralized FX basis curve. That means traders can price and execute cross-currency trades with Bitcoin as the trusted reserve asset. This is the birth of Bitcoin funding markets at a sovereign scale. And this is the point where Bitcoin begins dictating interest rate structure and liquidity conditions, not governments at all. And you might be asking, Adam, why is this a big deal? Why are the implications so staggering? And this is why, because Bitcoin can now without arbitrage sovereign monetary policy. Institutions can now borrow against their stretch holding in one market, move funds into another, and exploit yield spreads without touching government's collateral. That is a direct substitution of sovereign credit with a neutral, apolitical, self-verifying asset, and this is not hyperbole. It is the logical outcome of superior collateral entering the deepest pool of global liquidity. Monetary power is just going to decentralize from here. It's game over. The history is already clear because the stronger collateral asset is emerging and the market is migrating toward it. And y'all think I'm joking, but I just gotta say that the gold rush for digital credit is currently underway. Shout out to Jackson Fairbanks from Strive. He is talking about the Bitcoin credit liquidity lately on X. He is tracking the Bitcoin-backed credit weekly volume, and I have one observation to make. From 6 weeks ago, right here on September 15th, to about now, October 27th through Halloween, I am noticing one thing. Look at the difference in the size of these bars. I am seeing that the trading volume of Strategy's credit instruments is up about 100% in 6 weeks. The world is coming for Bitcoin yield glory, and I can see it. I can smell it. And somehow MSTR is trading at a 1.2 MNAV. But hey, the asymmetry is the opportunity. This is not financial advice. This is financial entertainment, though. So this slide explains the most delicious part of this entire evolution. Bitcoin is not entering global finance because regulators suddenly approve of it. That is not reality. Bitcoin is entering because regulation literally created an opening that it cannot close, and this is why. Europe's banking rules, which are Basel frameworks, the capital adequacy standards, and collateral classification requirements, were supposed to contain Bitcoin, but they were written with a defensive posture. Their goal was to force institutions to hold fiat collateral and treat Bitcoin as a risky, speculative exposure. We all know that. That's how the institutions view it, but not for long. And Strategy itself found the path that flips those rules from a barrier into a bridge. By structuring the Bitcoin-backed credit instruments properly, the banks in Europe, they avoid punitive capital charges while still gaining Bitcoin-based funding advantages. So a rule that was meant to restrict Bitcoin instead becomes the mechanism itself that allows Bitcoin to serve as pristine collateral without the political permission of a sovereign government. And this is the type of transition that literally only happens once in a century because the old system is so overloaded with debt, it's so fragile in its credibility, so dependent on regulation just to sustain an extremely small little bit of confidence from anybody, that when a better form of collateral appears, it does not have to take power by force, it takes power by logic, and Michael Saylor is making the market accept that logic through the structure of Stretch. And Europe is going to be the first battlefield because its regulatory framework has created a loophole and Strategy is intelligent enough to exploit it. Don't you think that once these instruments exist in the United States and in Europe, they will be mirrored in every major jurisdiction? Banks do not sit well when superior collateral emerges. They are going to have to engineer access to stay competitive. And this is how Bitcoin eats the world, folks. Not by asking permission, not by waiting for policy approval. It slips through the cracks created by the legacy system's own contradictions, and then it expands until those cracks become the new foundation. So it's really funny. The regulators thought that they were defending the old world, but in reality, they have built the ramp into the new one. And this is what's amazing with Strategy right now. They are exploiting structural weaknesses in the fiat system. They are fundamentally long Bitcoin, short fiat, and they are finding the ways in, the easiest cracks in the dam to infiltrate. And every single weakness that Strategy is going to exploit is going to become a permanent corridor for capital to escape fiat gravity and enter a harder monetary regime. And still, nobody in legacy finance has internalized that a Bitcoin yield curve is forming in real time. This is not speculative staking yield, not a retail lending product, a real institutional funding curve that is driven by capital markets, cross-currency basis trades pretty soon, and credit pricing. Bitcoin is becoming collateral for borrowing in both dollars and euro markets, so a natural yield structure is going to arise. There are going to be traders that want to borrow against their BTC, deploy capital all across jurisdictions in the world, and then capture all kinds of spreads. The opportunity to utilize Stretch for this purpose is mind-blowing. So think through what this means. The Bitcoin yield curve is going to be determined by market mechanics and not political committees. We can literally feel humanity being freed with Bitcoin adoption right now. It's going to reflect real-time global demand for natural collateral, not central bank policy experiments, which is going to create a pricing system that's based on reality and not intervention. And we're just seeing the beginning of this right now. Obviously, I showed you that chart, but once the capital earns more predictable returns on their Bitcoin collateral, as Bitcoin becomes more accepted and the volatility decreases and we start to chop higher at lower rates but more consistently higher, it becomes more rational for allocators to hold more Bitcoin than sovereign debt itself. More Bitcoin collateral means deeper liquidity. Deeper liquidity obviously means more structured products for people to take advantage of, and more structured products just reinforce the Bitcoin yield curve. And the cycle feeds itself. This is sovereignty working for the common man in action. Strategy is building on top of Bitcoin. This is what was going to be inevitable, but Michael Saylor figured out the game first. He is pulling Bitcoin adoption from 20 years into the future to today, and he is offering incredible products that could only be built on Bitcoin. This is literally the birth of a new parallel interest rate regime, kids. And people think that Bitcoin adoption is about price. It's never been about price. It's about replacing the base layer of global capital. It is the new monetary operating system. It's a lot bigger than an investment. And honestly, it's a lot bigger than money itself. And Michael Saylor is the guy that understands that more than anybody. The signals are obviously flashing right now. Bitcoin is the only asset that is gaining the one trait that only true reserve assets ever achieve. It is becoming the instrument that determines the cost of capital in a world that no longer trusts sovereign promises. The curve is forming, the transition is irreversible, and the new monetary standard is arriving, and it's arriving through yield. The first movers who are building around Bitcoin credit are going to get ridiculously rich. Mark my words. You guys should see the DMs that I'm getting every single day from people who want to build around Stretch itself. You think that the entire world isn't going to be starting their own speculative attacks against Fiat using Stretch? Get real. And it's going to be happening in industry across industry. The first movers are going to access Bitcoin collateral before it becomes mainstream, and then they get to build the first cross-currency funding paths between euros and dollars and other currencies. They're going to be able to be the ones that get to arbitrage the sovereign weakness with incorruptible collateral. Stretch is literally the financial Trojan horse moment. Europe is opening the gate. Canada is opening the gate. They're already inside of the gate in the United States, and Bitcoin is walking through, and the world is going to follow the liquidity. And this is the slide where I get brutally honest about what this transition means, okay? The existing financial system rests on a single pillar, that sovereign debt is treated as the safest collateral in the world, but obviously that is fake, and the bluff is being called. Government bonds, remember, are supposed to be risk-free because they back the entire banking system. They underpin the FX markets, they anchor pension funds, insurance funds, global credit creation itself. But here's the truth, that model only works if sovereign debt maintains credibility. Did you guys know that the US is on pace to reach a $55 trillion national debt by the time that Trump leaves office in 3 years? The system is terminal, so if investors believe in repayment, if inflation stays contained, it's just totally illogical. If political systems remain stable, if governments retain fiscal discipline, every single one of the pillars are being broken in real time, and Coin is punching them down and destroying them thanks to Michael Saylor, a big part. You guys need to understand that the old system is failing and Bitcoin is stepping into that vacuum with perfect timing. It is beautiful. It is incredible to see this playing out right now. We see JP Morgan saying, yeah, you can use Bitcoin as collateral. Michael Saylor's talking about how banks in the first half of 2026 are going to be buying and custodying Bitcoin. Nobody is going to have a chance. The debasement trade is in full swing, and Strategy is the only company that is geared up to take advantage of this situation on an international scale. And the thing is, all of the investors in the entire world, they don't need to hate government debt. They simply need to prefer a better collateral asset that never steals from them through dilution. The sovereign bonds pyramid has always existed because there is no alternative, and now there is. And apparently it's going to be available to everybody. Strategy is going to lift millions of people out of financial ruin. Now, to be clear, I do think that this asymmetry is terrifying the legacy power structures because it breaks their monopoly on capital privilege. That is why the S&P inclusion in December is a big catalyst. Now, I am more giga-bullish on strategy than anybody in the entire world, but if I were to wager, they are not getting in December. I would love to be pleasantly surprised. But think about what this says from those legacy power structures. This is a final sign-off on Bitcoin being validated. The entire countries and companies, corporations that have relied on endless debt issuance to maintain power are going to face market discipline for the first time in generations. A lot of us have never lived through an event like this. And the free market, as I'm sure you all know, is very merciless. It doesn't care about politics. It only cares about collateral quality and the yields. This is the transfer of monetary gravity. When you look back at monetary history, the asset that becomes global reserve collateral always, literally always, ends up redefining the era. Gold defined empires, but then the Treasuries defined the American century, and now Bitcoin is positioning itself as the collateral that will define the digital age. We are witnessing Bitcoin move from being a bet on the future to becoming the foundation of the future. Strategy had the first credit models that opened the first institutional credit pathway, and now the European stretch expansion is going to open the second. This is not a product launch, kids. Stop thinking of it like it's a product launch that needs some marketing campaign. This is the genesis of the new global monetary layer. Somebody has to build the Bitcoin monetary infrastructure in the legacy system, and Strategy is the only one that is doing that at an incredible scale, and they're doing it faster and smarter than anybody else. As far as I'm concerned, from here the flywheel for MSTR is going to become unstoppable. More collateral acceptance just means more liquidity. More liquidity means deeper markets. Deeper markets attract global capital. Global capital then forms a yield curve, and a yield curve anchors a financial system. The Fiat era built its power by exporting credit, and the Bitcoin era will build its power by exporting certainty. This is the beginning of the end for monetary coercion. This is the beginning of the age of voluntary capital migration. This is how Bitcoin eats the world, and we are here at the moment that the tide has turned. My name is Adam Livingston. I am the Bitcoin Wizard. If you are as giga bullish as I am and you want daily videos during the greatest wealth transfer in the history of humanity, hit the like button, subscribe to the channel so you get updated every single day, and then send this video to your friends and family so they too can hear the orange gospel. Have a terrific day. Do not party too hard. Class dismissed.
Once again, a special thanks to Horizon for sponsoring this video. Most people don't realize this, but on average, 60% of American homeowners' net worth is locked up in their primary residence. And with home prices more inflated than ever, Americans now sit on a combined $35 trillion in home equity. Now there's a way to unlock that trapped capital and put it to work in Bitcoin. Horizon helps homeowners unlock a portion of their home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual, and then later when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you've been sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.